Good evening, everybody. I am Janai Thornton, and I want to welcome you to the Thank Me Later Money Mindset Masterclass on how to overcome your fears of the IRS and tax season. I know just saying that out loud can make people nervous, right? I'm just happy y'all are here. And I had to think about my own IRS stress and fear and phobia as well as we prepared for this session. So excited that you're here. So we started something new this season, our second season of Thank Me Later, under the guidance of one of our team members, Tiana Ridgway, who y'all see, Tiana, who said, you know what? We're going to do something a little different this year. Instead of just jumping right into our programming, because you all know every month we have a different theme, she had the idea that our first event that we'll do each month is really going to be anchored more in mindfulness to make sure that we can all get equipped and prepared for the season. So I'm going to ask everybody to mute themselves, please, because I hear some of y'all in the background. I don't want y'all to miss a thing because tonight's amazing. So, we just started talking about how much fear and anxiety that so many of us have about tax season, and in particular, the IRS. So you know what? We said, we're going to find the perfect person to guide us through this conversation and get us ready. So I want you all to say hello to and welcome our guest, Tomika Bullitt. Thank you, Tomika.
Good evening, everyone.
I am so excited that you're here. So just a little bit about Tomika, and then Tiana, I'm going to turn it over to you. I consider Tomika a colleague and a peer from one CPA to the other, but Tomika, you're the first CPA I know that actually also worked for the IRS too. Never even knew people like you existed. So with over 20 years of experience in the accounting field, I can't believe that you worked almost 15 years for the IRS. That's insane to me. I'm like, who works for the IRS? Never heard of that before. But I'm so grateful that you're here and that you've been on both sides. You've been on the CPA side, accountant side, helping people, prepare their returns and accounting and all that stuff. But you've also been on the IRS side. So very grateful that you're here with us this evening. Thank you. I have my list of questions ready for you myself. And Tiana, I'm going to turn it over to you so you can get us kicked off.
Awesome. Hey, everybody. So I'm going to share my screen so we can kind of go through some of the slides, but to set you guys up for what to expect today. So we will be centering the conversation for the first half of our session about mindfulness as it relates to tax season and why we have fears, anxiety, nervousness, and worry about this season. And so some of the topics that Tomika will talk about in the slides that we will go through include communicating with the IRS. So do's and don'ts of that. What increases the likelihood of you being audited, and in general, how to make tax season a bit more smoother. So we're going to go through those. We have, if you've attended some of our other sessions, you may be familiar with Menti, which is an engagement tool that we have. So we'll have some fun. So you'll need to have your phone out. And so we'll go through those slides, but then we'll leave the last half of the session for Q&A with Tomika. So feel free to drop your questions in the chat. If you would like to just kind of get in line of the questions, but you can also, when it's time for Q&A, you can take yourself off of mute and ask your question or drop them in the chat then. So let's get started, y'all. And housekeeping notes, if you can, again, mute your devices. And then Lauren just dropped in the chat tax guide that we shared in the community today. So we do have a handout each month, and the February handout is live. So definitely check that out and we can dive on in. So I'll share my screen.
While Tiana's sharing her screen, like she shared, you don't have to wait if you have questions, although we're going to take all the questions at the end. Go ahead on and get in queue and get in line. So any questions, any comments, please go ahead and do that.
Yes. And I'll just say about that, if your question is a lot to type, you might be better off taking yourself off of mute and sharing it during Q&A. But up to you, but it might be something you got to talk through. All right. So this is our February Money Mindset Masterclass. And to kind of get settled in, to think about what we're about to cover, this is what you need for the session. So an open mind. You talk about mindfulness, you have to have an open mind, and we'll be doing some reflection, assessing where we are. Self-awareness as well. You will need your cell phone to access Mentimeter, and we'll show you how to do that. And then, as I mentioned, Lauren did drop the February download in the community. You don't necessarily need it for this masterclass, but definitely need it for tax season. So want to make sure we call that out. So just to revisit, so we do have this financial fitness wheel that we shared during our last Money Mindset Masterclass to just kind of level set. Whether you're new to the community or you need a refresher, we do cover a different topic each month. So January was about mindfulness and goal setting. So we checked that off. Though mindfulness is something we're going to do year round, and goal setting, we're going to check in on our goals. We did check that one off. And right now is the star. We are focusing February on taxes, in addition to your career and your business. And so Tomika is joining us today. And we'll also, at the end of the session, talk about another session that she's joining in a few weeks to talk about business for entrepreneurs. So today we're talking about fear of tax season and fear of the IRS, because I'm in that boat. Okay, so some of the goals of this Money Mindset Masterclass. So we want to unpack, why do we have fear of the IRS? Really, what is behind our fear? And fear may look different for everybody. It may be procrastinating on filing your taxes. It may be, you guys can hear me right?
Mm-hmm.
Okay.
Yes.
It may be procrastinating filing your taxes. It may be avoiding opening letters from the IRS, or just like dragging your feet on the whole process. So that's fear. It may not look like fear, but that's kind of some of the ways that fear shows up. So we want to unpack that and how we overcome that. We also want to talk to Tomika about audits and how to communicate with the IRS, and then overall mentally prepare for tax season. So to anchor ourselves in a money mantra and an affirmation, we want to say, so say it with me, y'all, even if you're on mute. I approach tax season like the boss I am. I approach tax season like the boss I am. And if you have another affirmation that really resonates with you, feel free to share it in the chat. But the reason why we chose this affirmation, this money mantra for this session, is because we all have to boss up and file our taxes. Whether you have a 9-to-5 full-time job or you're an entrepreneur, Uncle Sam is going to get his coins regardless. And it's better to be on the IRS's good side than to not. And so we want to keep stress at a minimum by simply filing our taxes and paying what we owe, and really shifting that this is a money move that we all have to make. And so tap into the boss that you are, boss up. It's time to boss up. Okay. Fix your credit, girl. Get at it. Get your bag up. It's a song called You Got It by Vito. And I thought that was a cute way to anchor today's session. So boss up, ladies. Like, we got this. I got this. You got this, girl. Taxes is something I struggle with myself. So I am ready to get it going, and I hope you guys are too. So first question for Mentimeter. So I'm going to stop sharing real quick. And sorry, guys. Can you guys see my screen? This whole time y'all couldn't see my screen? Why no one told me? I'm zipping through these slides, talking to myself. I'm sorry.
Girl, I did not know you were, no, we don't see your screen.
Oh, y'all couldn't see this whole time. Okay. It's okay.
Now we see your screen.
Oh.
I'm sorry.
My slides. Well, now we got to zip through these slides, y'all. Wait, just
Girl,
real quick.
take us back quickly.
because I put some gifts in there. Okay, so this is the wheel that we referenced of where we are now. And then these are the goals. Again, unpacking why we fear the IRS in tax season, discussing audits and communicating with the IRS, and then mentally preparing for tax season. And our mantra, I approach tax season like the boss I am. And these slides will be available in the community too. So I'm just going to zip through these. And so this is what we're talking about, of just the mindset of you're going to have to pay taxes regardless. So make sure that you are in the space to do that mentally and stay on the IRS's good side. This was the lyric I was referring to. So now it's making sense why y'all were like, I don't know what y'all talking about, girl. Okay, so Menti, so pull out your phones, please. And I'm going to pull up Menti, which is a really awesome tool that we have. All right, you guys can see my screen, right? Okay, so if you go to menti.com and then type in this code 69857325, and I discovered when researching that there is a phorophobia, which means fear of the taxes in the IRS. It's a real thing, according to Google. So want to check in of who has phorophobia. I'm gonna get it right.
That's a real thing, Tiana. It's a real thing.
It's a real thing. They didn't tell me how to pronounce it, so I'm struggling in that department. But Google said that it was a real thing that people fear. And so to kind of level set and kind of see where we all are, we have some yeses over here, some no's. Good for y'all. I'm gonna check that yes. All right, just to kind of level set and see that we have a lot more in common than sometimes we realize. So moving on to the next slide. Oops. So what worries you most about tax season? And you can choose multiple options. So we have not being organized, digging up old records and forms, finding a trusted tax preparer, filing your taxes yourself, having to owe, being audited, or the time it takes to prepare the tax return. And if there's also something that is not represented here, feel free to drop it in the chat. So we have a lot about having to owe.
Nobody wants to pay, for sure.
Nobody wants to do that. Being audited, finding a trusted tax preparer. All right, see, having to owe, that is a pain point for a lot of us, I see. Okay, thank you guys for chiming in there. And then, some more. Okay, so we're gonna move to the next one. So what do you think you should do when you get a letter from the IRS? Should you open the letter, ignore it, call the IRS, email the IRS, or call your accountant or tax professional?
Yolanda said cry, Tiana. You didn't have that as an option.
That one. That's a real one. That's a real one.
I know, right?
Okay, a lot of open the letters and call the IRS. Though I called the IRS on Monday and I was sitting on the phone for an hour. So I don't know if y'all gonna want to do that, but it's okay. My situation got handled. Okay, so open the letter is what most folks said. And so I'm gonna cue it up to Tomika and share a slide where she'll talk about communicating with the IRS. And if you guys just give me a second, I'll pull it.
So technology issues were just all over the place, Tiana. So you forgot to share your screen, and then my computer just started losing its mind. So I had to join from my phone. So hopefully you can hear me okay?
We can hear you. We can't see you, but we can hear you.
You can't see me. Now that's a problem.
Janai, could you spotlight
Lauren? Wrong person, Lauren. Thank you, though.
I
What'd you
see
say?
Tamika at the top, but I can't. Oh, there she is. There she
There
is.
she is.
I
Okay.
got you, Tamika.
Okay, welcome back. Thank you, Lonnie, for saving her. Thank you.
Welcome back, Tamika. Okay, so
Thank you.
all good. So actually, we can address before we hop into communication. Let's unpack our fears around the IRS. So I'm going to pull up this slide, Tamika. If you could chat through from your experience, what are some of the fears that folks have about the IRS and tax season in general? So, Tamika, if you could walk through your thoughts on this.
Yeah, definitely. So, the first thing is, people have a fear of the IRS for good reason. The IRS has a lot of power and a lot of authority. Most of us like to have control over what we're doing and what comes in and out. But with the IRS, essentially, they have the power and the control. They can put a lien on your home, they can garnish wages, they can, levy assets. So I think first acknowledging that the fear of the IRS is not a crazy thing. It's real because they have a lot of power and authority. So you're not alone. I think it is the first thing to acknowledge. You want to address that fear by dealing with the IRS head on. Once you realize that, oh my gosh, okay, I'm afraid to open this notice, or I'm afraid to even file my taxes for the most part, just because of all of the anxiety and all the work and the stuff that I have to do. You want to address that fear. And the worst thing that you can do is to avoid the IRS. Procrastination is real, but with the IRS, they just get more aggressive, and the tone of the notices just really increase if you don't respond or address it. So definitely acknowledge that you have a fear, recognize that it's okay, it's legitimate, it's for a good reason, but also know that you got to deal with it head on. It's just not one of those things that you can keep putting off, because it only gets worse.
Tamika, though, I think you just said something important, that people have to understand the escalation. So it's not like the first notices are like, I'm getting ready to put a lien on your house. It doesn't start that way. So can you just kind of briefly talk about that progression, and like, why does it get to that point? Is it because people have ignored, people haven't paid? Like, what does it take to get to that?
Exactly. That's a good question, because people always say, oh, well, the IRS, they're going to garnish my wages. No, I promise it doesn't start like that. To your point, it's, that first notice, by the time you get to a levy or a lien, you've gotten a good number of notices, sis. This is probably your fifth or sixth notice. And that fifth or sixth notice can be over 5 or 6 months, or it can be over a year. There's no set time frame that says, hey, when I issue this first notice, we're going to wait another 30 days. Sometimes that's the case, but in other times it may be quicker, depending on maybe the balance that you owe or something to that point. So when we talk about the aggressive actions of the IRS, no, it doesn't start like that. They really do give you the opportunity to respond, to pay, to file, whatever the issue is. It's when you avoid them that we hear about, we don't hear about I don't know that there's a good notice from the IRS, but we don't hear about just the general correspondence. We always hear about, oh my gosh, they issued a lien, or oh my gosh, they seized assets. And that's, you have plenty of opportunity before you get to that point.
And Tamika, if you could just to level set, in case folks don't know, what is a tax lien and a levy?
So a tax lien, I would probably best give an example of, if you own a home, of course, there is a mortgage, or there may be a mortgage on your home, and say you decide that you want to move, you want to sell that house. If the IRS were to put a lien on your asset, meaning your home, that then says you cannot sell this piece of property until you pay said debt. And so that is, they're leaning real hard on your house, and they are not letting up until you pay them their money. So that's probably the simplest way that I would describe a lien. And a levy is truly them garnishing or seizing your assets. So if you have your wages were one, that's an asset. So that's them garnishing your wages. If you have a second home, if you have a vacation home, if you have a boat, whatever your assets are, that's them then seizing the property to then sell it so that they can pay off the debt. So lien and levy, two different things. Great question though.
Thanks for clarifying that. All right. So now we can move on and talk a bit about communicating with the IRS. So you mentioned, Tomika, you absolutely do not want to avoid the letters and notices. So if you could and I'll pull up the slides again, but if you could talk about the best way to communicate with the IRS and any tips that if you have to get them on the phone, if there's anything that you want to share with our community of the best ways to communicate with the IRS.
Yeah. By far, I would say calling the IRS is the best way. And that's for a number of reasons. One, because of COVID, and we're still dealing with the COVID backlash, mailing something to the IRS is goodness. It is truly a task. And they have just piles of mail that they're just so behind. So I say the quickest way to communicate with the IRS is definitely by phone. But the caveat to that is you will definitely need to pack your patience, because just like everything else in the economy now, everybody's short-staffed. It's hard to get people to work. People are retiring. Yeah, I think the IRS people, work there for 30, even sometimes 40 years. So they have very limited resources. So calling the IRS, you're going to be on the phone for a couple of hours, not one, but you're probably going to be on the phone for a couple of hours. So I will say that. Also, something to keep in mind, as I don't know, you probably hear it before, they say if you don't succeed the first time, try again. You can call the IRS and get a particular representative, and you can already tell the energy is just not right. Like, oh goodness, he or she is having a bad day, or they're having a long day, or what have you. But don't be afraid to, maybe wrap up that call or complete that call with that person and try and talk to somebody else again. Call again. So don't be afraid to try again. Don't take the end all and say, okay, well, this person said this, and so that settles it. Be willing to try again. Yeah, and I think we mentioned before, definitely open up the letter. If they're requesting something in writing, you want to make sure that you either fax, there's a fax option. They're even trying to get a little bit sophisticated where you can upload documents if you've received a notice from the IRS, but that is by invitation only. It's kind of I think it's like irs.gov/connect. But they have to have already authorized you to participate in this program. So, you can mail. I hate saying mail, but it is an option. If you need to fax some documents to the IRS, typically they will provide the fax number on that notice. And then again, like I said, if you have the ability to upload, that's another way to submit information to the IRS.
Mm-hmm. Tomika, I have a question. Typically people are just calling the 1-800 number. But there's some people who have had to deal with the local office where they live, because you've had to go in, obviously this is, possibly pre-COVID. Is there a benefit going one way versus another way? Does a strategy matter?
I think it kind of goes back to that. If you make a phone call and that person just doesn't give you the answer that you were looking for, you have the option to go in person. And if sometimes if your communication is better going in, I will say oftentimes when you're face to face, as with anything, you can get a lot more done. Sometimes it's nothing like having a meeting with someone face to face where you can say, no, see, look, right here, right there. Where it's like, oh, okay, let's get that done, versus, okay, well, let me fax it to you. Let me email this to you. Let me upload this to you. Oh, the document is too large. We can't receive your fax. So definitely in person, like most things in life, are better addressed that way. But because of COVID, there's just not a lot of in person that's going on. So once we get past COVID, and prayerfully that's soon, we will be back to that option with in person. And I would say that in person is a good option as well. Probably the best person if you can get an appointment, because now everything is by appointment. Previously, when you would be able to go to an IRS office, you could just walk up, walk up to the office, get in line or get an appointment. Now you truly have to go online, schedule an appointment, and then go on the appointment date.
And then my last communication question, say you're lucky enough to get in touch with somebody that you're like, oh my gosh, I love this person. This is my IRS agent. Is it ever possible to talk to the same person more than one time?
No. That was just, I just wanted to keep it straight. I couldn't even dance around it. So let me clarify. If you are being audited, and it is an agent that, when I say agent, a person that, what they call a field agent. So if you're being audited, you are assigned a specific individual that is working on your case. So can you pick up the phone and call that person? Most definitely. If you're calling the random 1-800 number, unfortunately, the answer is no. You can call again. There is no direct number where you could reach out to that same person.
And I know I said that was, oh, go ahead, Tiana, I'm sorry.
Oh, I was curious. I think I know the answer to this, but what are the ways that the IRS won't communicate? Like, just to avoid any scammers, anything, how, like, on the flip side of how to communicate with them, how to kind of prevent scams from the IRS, from people pretending to be the IRS?
Yeah, the IRS will not email you. They will not just cold call out the blue, send you an email and say, hey, you owe us $2,000. Click this link below and send us the $2,000. They will not do that. Of course, they will communicate by mail. And if you have a balance due, and that balance due has been around for a while, there is a possibility that your case has been assigned to what's called a revenue officer. And that revenue officer very well will show up at your door. Yeah.
Not even calling you first. They gonna just show up at your door.
No.
No.
Know that, Tomika.
Yes, and that's what they do. So when they're getting all this information, because remember, they have your W-2, so they know where you work. They're the IRS, so they know your address. So a revenue officer, if it's to the point, again, we're talking about different stages here, but if it's to the point where they've issued several notices and there's a balance due, that revenue officer can just come knock at your door. That revenue officer can show up at your job. Yes, they can.
And is that normally once you get your balances over X, or does it matter?
I won't say that it's a set dollar amount.
Okay.
And I'm sure from a collection standpoint, they have a certain threshold as to which they will put resources on.
Towards, okay.
And so we're talking about multiple notices and a pretty significant amount. If we're not talking about $2,000, the IRS is not, we all know how government resources are these days. They don't have the resources, the manpower to send a revenue officer out for $2,000. So I'm sure that there is a certain threshold.
And forgive me, Tiana, I know I keep saying this is my last question, my last communications question. But no, this is something very important. Tomika, can you just speak to the importance of when people are communicating with the IRS, the type of notes that they should be taking? Because I know a lot of times people are calling and then they just kind of moving on. Like, you should be writing down, what is it, the agent number, like date and time of call, like what's important to keep up with?
Yes, so when you call the IRS 1-800 number and the person answers the phone, they will immediately say, this is Tomika, my badge number is 1007. So that is something that you want to be mindful of. And if you need to repeat their name, I'm sorry, what did you say your name was? Have them repeat their name. And I'm sorry, I didn't get a chance to write your badge number down. Can you repeat that for me as well? So now you already know the date we're making the call. You have that person's name, And now you also have the badge number. IRS is still heavily old school. So you have that employee ID / badge number, and that badge number is golden. So there could be multiple John Adams, but if I'm John Adams, badge number 1007, that's really what you want to make sure that you're writing down. And take note of what they said. Make sure that you're writing down any forms if you're requesting for a penalty abatement or for a refund or something, and they mention certain forms, make sure you're writing down that information for yourself, so that if you need to go back and reference it or say, hey, well, on this date, this person told me that, you have that information.
That's super helpful. So next up, I know one of the fears that you all put in Menti was that some folks fear having to owe. So Tomika, if you can talk a bit about what to do if you can't pay the IRS, and I'm going to pull up the slides that we chatted through.
All right, so in the event that you owe the IRS, you don't have to pay all at once. So if your bill is $5,000, it is best if you can make the payment and pay it in full. I always recommend making the payment in full. But in the event that you can't, there are options where you can request an installment agreement, i.e. a payment plan. That installment agreement comes with conditions. First, you have to make sure that you're current on all your tax returns. So you can't be asking for a payment plan from the IRS, but you haven't filed last year's tax return. They're going to deny you. They're going to say, nope, we're not doing it. First, you need to get compliant with us, file all your returns, and then come back and talk to us about an installment agreement or payment plan. Typically, the installment agreements or payment plans, they were 60 months, which is equivalent to 5 years. But in the last couple of years, it's been extended to 72 months. So you can spread it out over 6 months. You can have those, you can mail your payments in. You can have them electronically drafted, which is, of course, a lot easier. So the installment plan is definitely something that is available to you if you can't make the lump sum payment. The second thing that we've mentioned here is about the first time penalty abatement. So when the IRS issue you a notice for, say, a balance due, and maybe they assess you a penalty because you didn't file on time or you didn't pay on time, you have options. Don't just take it for granted and say, oh my gosh, I owe them this $700 penalty. Again, pick up the phone, get in line, wait your 2-3 hours, do whatever you need to do to pass the time, but know that you do have an option to request what's called a first-time penalty abatement. And they will waive your penalty with no problem, assuming that you, again, are compliant, you filed your returns. And in this case, first time doesn't mean first time ever in life. It means first time within the last 4 years. So just keep that, definitely something to keep in mind. If you have ever been late for filing your tax return or late for paying, you can get that penalty removed. You can't do anything about interest. Interest is just one of those things. It doesn't go away, but you can definitely have some wiggle room as it relates to a penalty.
That is good to know. I wish I would have known this last year, but it's okay because I know it now.
So
and you don't have to write a letter.
Right.
I'm sorry, go ahead.
No, I'm just saying, who knew that? Most people don't realize, and most people are afraid to even pick up the phone and even ask that. So I'm so glad that you shared that.
Yeah.
The key I hear you ladies saying is patience.
Mm-hmm.
You got to be willing to get on that phone and wait.
Yes. In addition to that, Ani, I'm glad that you said that. And after waiting an hour or possibly 3 hours, I think probably the longest I've ever waited on hold is about 3 hours. You have to be professional and polite.
Mm-hmm.
this is not the time to be short. You know, you want something from them. So I understand that you're not happy about waiting so long. You know, it's not their fault that you had to wait an hour or 3 hours or whatever it is, but you are not going to get what you need if you're rude, disrespectful, short, all of that. So please remember that, you know, just bring the right strategy, bring the right attitude and sunshine, you know, when you're talking to the agent.
That's so true. I think I mentioned before about how you can maybe gauge the representative's attitude, like if they're having a good day, but you kind of need to check yourself first, that if, you know, the kids have been driving you crazy or the significant other, and today is not your great mental, that's not the day that you need to call the IRS, because they will be just as short and, you know, quick with you, and you won't get a lot of, you know, out of them. So that's definitely a good point.
That.
And to confirm, Tomika, for the first time penalty abatement, you said no forms or documentation is needed, right?
It's as easy as peasy as saying, I would like to request a first time penalty waiver. And they're going to look in the system and you can do it over the phone.
Good to know. Awesome. Thank you. All right, so we're going to chat about audits next, and we have another Minty question.
No, I'm just saying, I see people are dropping their questions in. As soon as we talk about audits, we're coming to your questions next. So thank you for your patience. Tomika, I hope you might have to get up and stretch for a while, honey. We got some questions in there for you. They're in the queue. They're ready for you.
All right, so our next Minty question is, have you ever been audited by the IRS? So we just want to level set to see who may have been audited, who may not have. And then Tomika will talk about kind of what increases the likelihood of you being audited by the IRS. So we have a lot of no's over here, some yeses. Thank you guys for sharing, being open during this Money Mindset Masterclass. All right, so most folks have not been audited by the IRS, which is great. And now Tomika will talk about what to do to try to avoid it as much as possible. All right, Tomika, the floor is yours.
All right. Speaking from an individual standpoint, not necessarily from a business standpoint, most of the things that you put on your 1040 tax return are third-party documents. And when I say third-party documents, they have been reported not by you, not by the IRS, but maybe your employer. So you're going to have a W-2. Maybe it's your mortgage interest deduction, which is going to come from your mortgage company on a form 1098. Maybe it's your student loan interest deduction. Maybe it's the interest that you paid. So a lot of these documents are coming from third-party sources. And you want to make sure, of course, that you're reporting those on your return, but also be mindful of those things that are not coming from a third party, where you have a little bit more, I don't want to say leeway, but leeway is the word as it relates to, say, your charitable contributions, your tithes, your offering, your donations to your HBCU or to any other 501c3. Be mindful and make sure that the amount of contributions that you are reporting are what you can back up in the event the IRS comes, they come knocking. One of the red flags I will always say is looking at a return where there are a lot of zeros. Everything is 500, 2,000, 3,000. Not that that's incorrect, because it very well could be that amount, but if it's consistently throughout the return, sometimes that's an indication like, are these estimates? Are these actual numbers? So you want to be mindful that, not only what you're putting on the return is accurate, and they're not estimates. And with charitable contributions, anything, if you're putting a non-cash item over $5,000, that would require an appraisal. So if you had some expensive artwork and you donated it, it would require an appraisal. For your non-cash items, if the total is over like $500, there's an additional form that you need to complete. So be mindful of when you say, okay, well, I donated all these clothes or my old shoes or my old coat or what have you, and it was worth $3,000. I promise you it's not worth $3,000. According to the IRS standards, and a lot of times they use, believe it or not, Salvation Army has a really good tool that'll show you, okay, you know, a blazer is worth $10 or a pair of shoes is worth $20. So, you know, check that Salvation Army guide before you just say, oh, well, yes, my bag of clothes was worth $2,000, because that could potentially be a red flag. And also making sure that all those third-party documents that you do have, that they're reported on the return. So you could work a 9 to 5, but say maybe you deliver for, you know, Uber, or you have a side hustle that you do and they issued you a W-2 or 1099 for $5,000. Don't forget that to put that on your tax return, because the IRS has what's called a matching system. And so the 1099 or W-2 that's reported, of course, the IRS gets a copy. The person sends you a copy, they send the IRS a copy. The IRS is going to look at that it's a computer system that just matches it up. And so they can immediately say, oh, well, where's the $5,000 W-2 from Uber? And you get a notice, it's automatically generated. So just be mindful of that.
Mm-hmm. Thank you
So,
for sharing that.
So Tomika, what I heard is be careful taking some creative liberty. Yeah.
Perfectly summarized.
Yeah, perfectly. Y'all know what I mean, because that's what it is. And that's where we do get in trouble. You can't back up. You can't back it up. And I think the best advice, you know, that I'm a CPA and that another CPA ever gave me is, if not if, but when. Mm-hmm. Always prepare like they are coming. So that will make you be very careful about the decisions. Instead of saying, oh, I'm going to take a little risk, you know, let me see what I can get away with. Pretend that they are always coming. They are always coming. And that, I think, may change your behavior and also allow you to prepare and be organized a certain way as well.
Mm-hmm.
Who is counting every single item in their donation bag? I'm just asking. Y'all know nobody in this call is counting every bag.
Absolutely.
We're throwing it in the bag and we're saying, thank you for getting this out of my house. It's now becoming junky and I need to get all these things that I'm not wearing. I'm just trying to figure out how this is going to work. I'm like.
And your response, Tomika, is what?
Any suggestions, Tomika?
Well, okay, so technically, when you drop off this bag with all of these fabulous items that you're giving away, the organization should be issuing you a receipt and they should be signing it. And, you know, you should be putting on there at the time of donation, hey, I got 5 pair of shoes, 10 shirts, 5 blouses, and what have you, or a pretty good estimate of what you're putting on there. So just do it. Here's the tip. Do it when you make the donation. Don't wait for when it's tax time, because then that goes back to getting organized. When it happens, drop it in. Even if it truly is an estimate, at least it's an estimate at the time of the donation versus looking back 9 months later trying to estimate, well, how much did I put in that bag?
That's fair. That's fair. I'm on your website now, or on the Salvation, $2 for shirts.
Yes.
$3, that's the maximum price.
Okay. And that is not what y'all are thinking or what y'all are indicating. No, man. Nobody here is saying $2. I can tell you that right now.
Up.
Like way up too.
If they saw how much, like, not my favorite sweater, I love that sweater, I had it for years. No, it's $2. It's worth $2 tax. $2.
Wow. Awesome. So we're going to, in the sake of time, we're going to skip these other slides. We will share them in the community, but now we can open up for Q&A. We can start with Tomika, not our guest, Tomika, our community member, Tomika. She asks, are business bank statements sufficient for receipts for taxes? Or do I need to keep the physical receipts, especially for audits?
Good question.
I love that question.
Me too.
That is a really great question. And even though you said bank statements, I'm also going to include credit card statements, because a lot of times people will say, oh, I just get my annual credit card statement of the year and that's my backup for what I put on my tax return. And the answer is it's a partial backup. What that credit card or bank statement shows is the date, it shows who you paid, and it shows the amount. What it does not show is the business purpose. And if you are filing a business return, which is the question, you need the business purpose to substantiate that this is a business deduction. And a great example of that is we all love Target, and you can say, okay, today is February 2nd. I went to Target, I spent $200. Well, we know you could go to Target and spend $200 on toiletries. You can spend $200 on groceries, or you can go buy an office printer for your business. And so, you need that actual receipt to answer your question. It's helpful. It's not the end all be all.
Awesome. And just a little teaser, Tomika will be joining us on February 23rd for a session specifically for entrepreneurs, along with her colleague Brandy, who's amazing. So you guys are in for a treat. So mark your calendars for that and stay tuned for the invite to come in the community. But just wanted to plug that for the business owners on the call. All right. So next question, I'm just kind of going in order, and then you guys can drop in more questions or take yourself off of mute. All right. So I don't want to butcher your name. Kadria, sorry if I'm saying it wrong, asks, any programs that can assist with penalties balance due? I don't know if this was dropped prior to talking about the first time penalty abatement, but if there's any other programs.
Yeah, so in addition to first time penalty abatement, there's also what's called a reasonable cause penalty abatement. So say you don't meet the first time requirements because maybe you did file late last year, or maybe you haven't filed your tax return, so you don't meet first time penalty abatement. There is something that's called reasonable cause, meaning, yes, I did this, I filed late, or yes, I paid late. However, I had a really good reason. Maybe I had, I hate to use this one, but maybe I had a death in the family. Maybe I was ill myself. Maybe, I didn't get the document that was excluded from my tax return because it was never issued to me. So there are certain criteria, and it's called reasonable cause penalty abatement. So there are other options in addition to first time abatement.
Tomika, what about the Fresh Start program? Have you heard of that? Because I hear that advertised on the radio a lot. And it makes me a little nervous.
Mm-hmm.
Yeah.
Your face said it all.
Oh my God. So y'all did not catch her face? Okay. I
always had to work on that, my face.
No, ma'am. I'm just like, okay. So that means we need to stay away from that.
Yeah. I'm with the first time. I don't know if that's related from like the collections arm, but I do too hear that advertisement on the radio. I am not familiar with it myself. Okay. I will say that.
Yeah, be very cautious, ladies. We all listen to, it's very common on Black radio to hear companies pushing this Fresh Start program. Oh, just call and we can help you. We can make all your taxes go away. Please proceed with caution.
All right, next question. Dana asks, my son was 17 until December 4th. I'm head of household and was not offered the child tax credit last year. Am I missing something, or can I apply for the credit on this year's tax return?
I'll start with the latter part. So you can only get the child tax credit for that tax year. So I think your question is, well, hey, can I go back and get what I didn't get for 2020? And I think the answer to that is no. In terms of the child tax credit, I do know that they made some changes regarding the age, but it may have been if they were 17 by the end of the tax year that they did not qualify for the child tax credit. Yeah, so it may have been just at the as of the end of the tax year.
Okay, thank you for that. Our next question is from Yolanda. She asks, what if in regards to the payment plan, what if the payments they offer are more than what you can pay?
Great question. There's also, we talk about communicating with the IRS. That's something that you want to say. What you guys are offering me, I can't afford to pay this. And then there are other options where they can go through an analysis. I think the form is like a 433B or something, where you would then list out, hey, this is my W-2, or this is what I bring home. Here's my mortgage. Here's my daycare. Here's my car payment. Here's my utilities. IRS, I can't afford to pay you that. So yes, there are options where you can request for a reduced amount, but in asking for that reduced amount, this isn't one of those where you can just ask. This is one where you're going to have to ask and show receipts. So when you ask, you're going to have to be willing to really provide them with some personal information that substantiates that I can't make this payment. And do you really want to do that? And so if it truly is something that is outside of your means of what you can provide to them monthly, be prepared to show and prove your case, and they can definitely make adjustments.
That's really good to know. Thank you. All right. And next question comes from Lauren. She asks, are there any tips when filing to avoid owing or owing a smaller amount?
Now, Lauren, that's a real wide. That's one of the wide.
Lauren doesn't want to pay Tomika. She's trying to figure out how can you help her.
I don't want to pay less.
I know that's right.
It depends. It depends on what your specific tax circumstances look like. The more you have going on with your taxes, probably the more options that you have, meaning if you have children under a certain age, there is the child tax credit that someone just spoke about. There's also the dependent care expenses. So if you're paying for a daycare, you can write, you get a deduction for some of those expenses. If you have a small business, are you maximizing on your deductions? Are you making sure you're not leaving anything on the table? Are you doing business use of home? Are you having your your cell phone expenses? So it really just depends on your specific situation, and it's hard to say, do you have a student loan, or can you write off just all of that, those different things, medical expenses. But again, it applies if that is something that is specific to you. You're welcome.
And would you recommend increasing how much is taken out from your paycheck so that you don't owe? Is there something that you can be doing throughout the year?
I am of the mindset, I would, do you want your money now? Do you want it later? So that isn't a one size fit all. Some people look forward to that larger refund at tax time because, hey, this is my vacation money. Or this is what I use to, put an extra amount in, or my car payment, or I use that to make an extra payment on my house note. So it depends on your personal preference. I'm of the mindset, I like my money every time I get paid. So I'm not looking for a refund. I don't want the IRS to hold on to my money where I don't get any benefit from it. And then at tax time, I get this large refund. But people have different needs and different desires and different goals and objectives.
Good to know. All right. Next question is from Dana. Is it true if you belong to a tribal government or classified as an original, you can file exempt? And
Tomika's
take yourself off mute, because I don't know if
Tomika.
I don't really know what that means.
Oh my, Tamika's like, wait a minute, hold up. So is there anybody exempt from paying? Let's just go there. Is there anybody who does not have to pay?
Yes, for those, I won't say pay, if you make under the standard deduction amount, that if you make under less than $12,000, so if you have a child or someone, they had a summer job, they don't meet the income threshold, They wouldn't have to, file a return. If you're an older individual and you're drawing Social Security, a portion of that is tax exempt, so you don't have to worry about paying or filing a tax return.
But any race, Native American, is there anybody who's like, you free, like you good?
Not that I'm aware of, but we don't want any Wesley Snipes situations. Okay. Okay.
So do not make your own rules, people, is what Tamika's saying. That's all.
Yeah.
No
Google what Wesley
freestyling out
Snipes
here.
went to jail for, and then that might.
Yeah,
better answer.
little tax evasion there. Just a little tax evasion. That is funny.
All right. Next question is from Monica. Are you required to file business taxes if there is no activity that year?
Love that.
That's a good question. So no, you're not. Depending on what type of business, I don't know if this is a sole proprietor reported on a Schedule C. I don't know if we're talking about a corporation or, a partnership. But the general answer is if there was no activity for the business in that year, then you do not have to file a tax return. What would you say, Janai? Would you add on to that?
Well, I think for the most part, if you file a Schedule C, I absolutely agree. If you're someone who's filing like an 1120S or 1065, y'all know who you are, partnership or S Corp returns. I have seen some people file 0 returns just because they're afraid that they don't want the IRS coming saying, where's your return? And then I have seen some people who just skipped that particular year. So I don't know if there's a right or wrong answer necessarily. But, you may even have some expenses that you want to report, even if you have not earned any income, though.
Yes.
Y'all can't roll those expenses. Tamika, I see people who try to do that. Like, I didn't file this year. I'm just going to roll these. I spent this money in 2020. Oh, but I didn't deduct those then. I'm just going to, deduct those on my 2021 return. No, ma'am. You can't do that. So the particular year matters. It really does. Tiana, a couple people are sending me direct questions. So I want to ask Tamika this. It's a good question. If someone has not filed in multiple years, where do they start? So oldest return first, newest return backwards, like what's your suggestion?
Yes, I would start with the oldest return first, because you never know what carryovers you may have from those older years that apply to the present year. Depending on if this is a situation where I haven't filed, I don't know where to start. I don't know where the documents are. I had a folder somewhere. I have since moved. What you want to do is to go onto the irs.gov website and request your transcripts. That would be one of the first things. And the transcripts, back up, when I say transcripts, that means a transcript of what was on the W-2 for that tax year, what was on the 1099, how much interest was on that 1099 interest statement, how much mortgage interest did your mortgage company report that you have a deduction for. So worst case scenario, you want to get compliant, you haven't filed in years, and you don't know where the documents are, start with getting your transcripts. And then definitely start with that oldest year, remembering, whatever penalty abatement, whatever reasonable cause. Why haven't you filed? Was there life circumstances, or was it the fear that we were just talking about? So depending on what that answer is, there may be some opportunity there for you to apply for maybe reasonable cause and say, I was in another country, I was an educator, I was working overseas in China, whatever the case may be. Start with the oldest year, request your transcripts, make sure that you are looking at any other type of penalty abatements that may apply to you.
And Tamika, real quickly, will you just speak to if you haven't filed in multiple years, but you're due a refund? Because people think, I haven't filed in 5 years. I'm going to file and I'm going to get my refund.
Yes, there is a time limit, or there is a statute of limitations that applies to those refunds. And so that's a really good point. If you have a refund, don't let it sit. Don't say, oh, I can just go back and get it at any point. You still have that 3 years where you need to go ahead and file that return so that you can receive that refund.
Tamika, can I ask a follow-up? Would you recommend the same thing for somebody who does their income? Would you factor income in at all in that? Meaning somebody who makes a relatively low amount of, income, they, like in Janai's situation, probably was due a refund, but obviously has let it, and at this point, they're not going to get it because of the timeline. Would you recommend that same strategy as going back to the furthest, or starting from the other way?
So if they have, you said in terms of just not a significant amount of income, should
like
they go back?
40,000, right? Like maybe 40,000 and under.
Annie, are you talking about in the context of what their income is, or what type of refund they're expecting back?
Well, income, and knowing that they're like, because they've said, they know they're not going to owe. They haven't owed in plus, 10 plus years or whatever, but then they just got off track, stop filing. Would your recommendation still be to go back to those older years, knowing that most likely is this going to be a net wash? They're not going to get their refund, or would you say, hey, let's just start fresh on this year and we're going to move forward?
Just like all this stuff never happened.
Bless and protect us.
Right.
If there's no benefit, if their income is under the threshold and they maybe say weren't required to file, or they file and they still won't get the refund because the time has passed, then in that situation, it's a moot point to kind of go back and file those returns because it'll be rejected, they won't get the refund, and it's a waste of time and resources. So I would not advise going back to those older years.
Tiana, I'm going to help you with a couple of these questions because, again, people are sending me some stuff directly. Y'all have some amazing questions. I'm like, man, I hear people ask this one all the time. So I want to know the answer to this. So is it true, Tomika, that you can pay each one of your kids under 16, $12,500 to decrease your taxes?
If you have a business and your children work in your business, yes, you can pay your kids a W-2 or, a 1099, and you can deduct on your taxes. You can. Just make sure that they're working, and, make sure it's not your 2-year-old. You're using a social security number.
Did she say the 2-year-old?
Not that you'd be surprised.
They are the meet and greeters of the organization.
Okay, here you go.
They are the meet and greeters.
Tamika,
that's why Annie not showing her face.
That's why she's not showing her face, because she know better right now.
Let's say everybody has a role.
Yeah. And a CPA no less too, Tamika. Let's call her out right now. Tim, I'm gonna ask this one more, and then I'm gonna ask you to take over again. This is really interesting. And again, this is another Tomika asking this question. Can we talk about debt that is charged off? So if a credit card company is charging off a debt, you owed $1,000. They only said that you only had to pay $500. What happens with that other $500?
Cancellation of debt income.
Income, people.
Yes, it is cancellation. It's simply put, that is the term. It is called cancellation of debt income. It is a benefit to you that in lieu of you making a payment to pay off this debt, the credit card company, discharges the debt, and that is called cancellation of debt, and it is taxable on your tax return.
And so do you have to report that only if you get the statement, because you literally get like a 1099? Because I guess the question is, she's asking, how does she report it? Is it just because she knows that she had that? Is she waiting for the statement to come in?
So typically the credit card company will issue you And I've seen it also more so with like mortgages and homes and things of that nature, where you have the cancellation of debt. Typically, they will issue a statement. You have some, Ani may answer this differently, and she may say, well, out of sight, out of mind. They,
Okay, Ani.
they didn't issue me that third-party document. It's between me and the credit card company, and the IRS doesn't know. But you just never know what will come back later. So you have the Ani answer, and then you have the Tomika answer.
Don't do me like that, Tomika. Don't do me like that.
Call her out, Tomika. No shame.
First of all, I was just asking for a friend. Because honestly, I know, in all seriousness, honestly, because what I find fascinating, because I am a CPA, ladies, for everybody who's on the call, but I have a lot of friends who constantly call because they read themselves, right? They're researching. I started this business. I'm getting ready to pay my kid. And they always come to me for that question. And so my thing is, what are they really doing? Well, all these people out here doing it, that we want to be quick to jump to what we think others are out here doing and benefiting, and they feel left out. And so I'm always feeling like the bad guy is like, hey, I would personally not do that. If my child was not like legit working it, I'm going to advise you not to, but they're like, Ani, so that it's funny because I'm playing, but that is literally the kind of conversation I have with friends often.
I believe it.
And they're looking at me like, oh, you don't know, you need to just get up on the times. And I'm like, okay, one thing, I'm not trying to go give the IRS any more extra money than I have to already give them.
Yeah.
So,
yeah. That's actually really good advice, because so often, you hear, well, I heard you can do this, and I heard you can deduct that. And there's usually if this, then you can do that. But a lot of times that part of once the story gets told so many times to the 10th person, they miss the beginning. Well, if you had a business, you can
right.
this use of home, not just, oh, I have a room, in my house and I want to take a business deduction. So, definitely be mindful of things that you hear by way of. Not that there can be some validity to a lot of it, but just be mindful of it.
Definitely. And I know it's after 8 o'clock. I just wanted to cover just a couple more questions. So ladies, if you have anything else that you want that's really pressing, please submit it in the chat now. And also feel free to come off of mute and say something. Tiana, I wanted to cover this one, and Sassy just posted this one. Should you file a deceased person's tax return? So let's assume you had your parent, grandparent, or somebody died last year, 2021. Should you file that return?
Great question. And I want to say it depends, but the reality of, do they have a will? Do they have outstanding debt? Are you trying to settle an estate? Or is this just a regular, and I won't say regular, wrong choice of words, but is this just, is this a family member? They were retired. There's not a lot of assets involved. And you want to go ahead and essentially close out their dealings with the IRS. Yes. That is the proper thing to do is to file the tax return. But we all know that there's a lot of ifs and buts and circumstances related to that. But yeah, because there actually may be a refund that's associated with their tax return, and you don't want to leave that refund on the table.
Janai, did you have any other questions that folks DM'd you privately?
No, no, you can, I know I've been kind of bopping around a little bit, but if there's a few more in there that you may want to cover.
Yeah, so I see that Tanya asks, do you file as self-employed if you work at a nonprofit that you founded and direct? So you work for your own nonprofit. Do you file as self-employed?
So you're filing a 990 information return, for that non-for-profit. And if you are paying yourself a salary or drawing funds from that non-for-profit, it would not be considered self-employment income. I'm more of the partnership. But with that 990 return, you would be reporting any distributions, whether it be wages or 1099 on that 990 return, and it would not be through self-employment income. That non-for-profit should be issuing you a W-2. And then that you would put on your 1040.
Tomika, can you speak to that really quickly on, just because you start a non-for-profit, you are not the owner of a non-for-profit? Because I think that's why probably that question comes up often, or people feel like, well, I started, I fill out the paperwork, but that's not really how it's viewed from the IRS perspective.
You know, to be honest, non-for-profit is, I don't have a lot of experience in the non-for-profit realm. So I don't want to give out anyone, any advice and mistake. Because like, well, see, they told me and they forgot the if part, that the if part was, I don't do a lot in non-for-profit. So I would probably defer to that question because it's not my area of expertise, to be honest.
And Tomika, I'm glad you said that, because people don't understand, accountants are, we're like doctors. We are very specialized. We have no experience in nonprofit. Some have, like, we can focus in very particular industries or types of tax. So just like you don't go to the dermatologist if you're having a heart problem, we're kind of the same way too. So certain areas, we're like, ooh, got to stay away from that one. Not our area at all.
And I know how to stay in my lane, and I'm not a
very specialized area though.
All right, we have a question from Monique. She asks, is there a statute of limitation on how long the IRS has to bill you?
To bill you, no. There is a statute of limitation as to how long the IRS will maybe audit you or, continue to collect on a bill, but there is no statute of limitations for when they bill you. And unfortunately, in these COVID areas, it's definitely a lot longer than once you file that return, and you may not get a bill maybe 4 or 5 months later. And that is highly likely at this point. So it's coming, sis. Sorry.
Wait on it. Tamika asks, if a credit card company charges off the amount.
Oh, I asked that one.
You asked that one? Okay.
Yeah.
I think you've asked all of these.
No, ask the one of Tracy. Did you recommend teenagers?
Oh, okay. Tracy asks, do you recommend teenagers that worked a summer job and made less than $2,000 file their taxes?
It depends. Did they have taxes withdrawn or withheld from that $2,000? And if they had taxes withheld from that $2,000, then they should definitely file a tax return so that they can get that money back. So if they made $2,000 and they paid $50 in federal tax, they won't have a tax liability. So that $50 will come back to them in a refund. If they made $2,000 and no federal taxes were withheld, don't worry about wasting the paperwork.
Okay, and it looks like we missed this question from Kim. It is like a general question. So, if it's not your lane, Tamika, you could swerve this question. But how does Trump, Musk, and those type of not pay taxes, just setting up trust funds help to lower taxes?
Tamika, how people always hear, Trump paid no taxes and Elon Musk isn't paying any taxes, so obviously that makes us regular people feel like, what are we doing paying all this money? So is there something that they're doing? Are they setting up some sort of trust? They're doing something kind of fancy over there that we just aren't able to do?
Yeah, I think it's kind of, even if you look at the basic 1040, and I was saying, I think someone asked, well, how can I pay less? And part of my answer was, well, the more that you kind of have going on, the more options that you have to either get a child tax deduction or a dependent care deduction or a student loan deduction or a charitable, so the same applies in a business setting. They have, they're dealing with millions and billions of dollars. They have more sophisticated, offshore accounts, foreign, all these type of different tax benefits that are available to them that are not necessarily available to us common folk.
All right, and then last question, and you guys feel free to drop any final ones in the chat. I think we answered them all. Katrina asks, how long should we keep old tax returns?
Great question. In terms of being audited by the IRS, I would say realistically, 4 or 5 tax years is good. Can the IRS go back and look at something 6 years ago? Again, it depends. If they suspect fraud, if it's a significant underreporting of income, which I think is like more than $25,000, they can then go back more than the typical 3-year statute of limitation. So, you want to do the 3 years, of course, but when you can be audited, I would just throw in another year to be on the safe side. So we're talking about 4 years of tax returns. However, again, here's that if statement. If you maybe have rental property and you've had that same rental property for 10 years, you should hold on to those tax returns every year that rental property was reported, because what you have on those rental properties is you're claiming depreciation. And so all of that is kind of, once you get ready to sell that rental property, you have to do depreciation recapture and all of that good stuff. So average situation, I would say 4 years, with the caveat, if you have a rental property, you keep those tax returns for the life that you own that rental property.
I'm curious if y'all would jump in the chat, anything in particular that you learned today? Want to know if y'all feeling a little better, feeling a little energized and getting ready for tax season, because we're going to get ready in February. I'm excited. I actually start working on mine on Friday. I cannot believe it. I've never started this early, Lord. I'm excited about that. But hope that this has been helpful, and hope that you're going to be really intentional about scheduling some time this month to get organized and to get ready. Because really, and I know Tomika, you feel the same way. I see Holly out there, another CPA, and some other peers and colleagues. To me, 90% of it is just being organized. Like, the more organized you are, it's just easier to get through this. So what's your system to not get ready just to get your return done, but what can you do all year long that's going to help you, so when tax season comes, you're not stressed. So please be very, very proactive, and let's get ready. Tomika, thank you so much. I'm super excited, and thank you. I'm feeling a little woosah, not quite as stressed about the IRS. Feel a little better here.